Okay, so you invest in this let's say a lesson, right? Of a property, right? You learned that it was like you were paying tuition to buy this property, and you probably ran into a lot of surprises along the way. Um, from there, I know you continued investing in real estate and alternative investments. So tell us a little bit about that. Why not, you invest in this rental property, it's not quite going as you expected. How come you didn't just throw in the towel and say, well, I tried real estate, guess that's not going to work. On to the next thing.
So I kind of did for a little bit. I lived in New York City at that time. So the very next property that I did buy 2 years later was a duplex. And it turned out to be an incredible investment. So everything that the low income housing play wasn't, the duplex was. Like I was living there. It was a much better area. I knew what was going on in the property. I bought it right. So I had a really good experience, but I was pretty tapped out because I was in the New York City market and I didn't really want to go out of state. I didn't really want to, I just wanted to kind of stay local. I wasn't creative enough. I probably could have bought a couple more duplexes at that time if I would have birded it out, but I really didn't even know about the term at that point. So I kind of was like, okay, I got 3 rentals. I'm okay. I still had a good size equity portfolio. So the one thing that I didn't like the idea of saying, okay, I really kind of like real estate better, so I'm just going to sell everything I have and go in there. I liked the idea of trying to look at what my traditional assets were doing for me at the time and saying, well, how can my alternative assets actually complement that? And it took me a really long time to get to that mentality. And my whole book is really about that mentality where I've been investing in traditional assets like stocks and bonds since I bought that mutual fund 20 years ago. So I didn't want to give up that experience, but I realized that there's a much simpler way of doing it where I could just kind of buy index funds, put 1% of my brain power on that. And then I could spend 99% of my brain power on alternative investments because that's where it's networking is required, due diligence, learning underwriting. So I realized that I could blend them really, really well, where if I just looked at my traditional portfolio as an appreciation play on autopilot, where I wasn't going to trade. I was just going to buy some low-cost index funds, leave it there. Later on, I got to do some cool collateralizations on them. But basically, set it, forget it, very little brain power. And then I started looking at my right side, my rental portfolio. So I was like, wow, everything that my traditional portfolio is not, it is, right? So low volatility, everything is private, nothing's trading hands. I'm like, wow, I really like that, complementing the fact that my traditional portfolio, I could sell at any time. Then I was looking at my traditional portfolio. Once I went to autopilot, and I definitely have a lot of good reasons why I did end up going to autopilot. But my main reason was because I realized that the income strategies for the traditional stocks and bonds are flawed. Because of the liquidity, you'll never really achieve a good income base from traditional portfolio. So what I realized is the alternative portfolio was absolutely perfect for that, where the yield was so much higher. There's much less volatility because they're private instruments, and they kind of came together really, really well. So in my life, I went from all traditional to some alternative to like a break, and just like I kind of went with the whole FIRE movement for a few years. And then I kind of went back and said, okay, I could I could make a couple of tweaks here on my traditional side of my portfolio, but now I could slowly add on to my alternative income portfolio, where I started getting into note funds and life insurance policies and all these private instruments that really kind of they are kind of related in some strange ways when you really get into them. And I found that it was much more beneficial to my portfolio when I started looking at the situation as an end situation, how the traditional investments and alternative investments work versus a verse situation, saying this is better than that.
Talk to us a little bit about the different types of investments that you've done and kind of why you see them, like what play do you see moving forward? Are you still investing in multifamily right now? Or what do you see happening? Going back to the basics, what's happening with multifamily and where do you see the alternative investment focus kind of moving towards? I know you've done some notes. I know you've done ATMs, mobile home parks, self-storage. What out of those do you think is should be a passive investor's focus over the next 6 months, 12 months, 18 months? What do you see kind of coming down the pipeline?
That's such a great question, and I agree with you. It's the market is so hot. It's crazy that.
Yeah.
But at the same time, I feel like it's tough to say that it's not a good time to buy today, because then we're saying that tomorrow is going to be a better time. Mm-hmm. And you could make that argument for the last maybe 9 years or so, and never have purchased anything.
Yep.
So I think the key is it's not about the asset class as much as the operator. Like right now, it's so much more about the operator than it ever has before. Like if we just rewind to the fact that the Jobs Act is 9 years old, that like we're literally in this boom period where a person takes a coaching class and they're raising for 150 unit building the next week, and you have to be able to look at it. And I'm guilty of it as well. Like I look at my first deal that I ever invested in, I'm like, what was I thinking? I was like, this is a really, really not good deal. But you have to go through that. So I think the best thing to do is, I personally, with apartment buildings and syndications, is the minimum is pretty high. That's where I think something like joining an investment club is critical, or networking with people that are going to give you unbiased information is so critical. And I'm not talking about for a day or two. It takes months. I remember it took like 9 months of phone calls where I would have an unbiased conversation with a fellow investor because they knew my interests were aligned with theirs. And once you get to that point, then you could zero in on the really, really successful operators. And then at that point, then you could still do an operator. I just see that the terms are just lower, but you could still get, double-digit returns. And if the operator has 30, 40 years of experience, they're probably going to still hit their numbers. And it's also really hard. Some of these financing terms that I'm seeing, it's making me look at these deals and we're like, wow, this deal is not that great, but wow, 2.6% interest rate, 5-year IO. It's really hard to lose on something like that. So, I don't want to say like, all right, right now it's a better time to invest in self-storage, because in my book, I cover all these different asset classes. I think I have nine total. And what the pros and cons, like self-storage, for example, has seen so much new supply come in where it's literally like 2 years of the most recent supply takes out 50 years of supplies going back like centuries. So it's so hard with pros and cons. Mobile home parks, same thing. They are in such high demand where I saw in my local area, I was looking at a mobile home park that was trying to sell at a 2 cap. And I'm like, wow, I might as well just buy in Manhattan at that point. So, and it was an off-market deal. I was like, wow, I couldn't imagine what an on-market deal would look like from this guy. So it's not as much. It's not as much as the actual asset class as much as about the operator. I still feel pretty good in the multifamily space if it's an operator that, I spoke to 12 different investors and they have nothing but the greatest things to say about them.